Hello, my name is Kevin Gioia, and I'm the co-manager of the Small Cap Fund, along with Andrew Board. As a reminder of our strategy, we tend to focus on the best 20 to 30 small American businesses that we can find to invest in. We believe the best businesses to invest in are those with long-term growth potential, but also business models that we think are resilient during challenging environments. So the strategy is similar to the other strategies at Fenimore, where we focus on what we think are the highest quality businesses. We just do so with smaller businesses. And that's very important to do because many small businesses tend to be unprofitable or utilize too much debt in their model, and we avoid those entirely. So turning to the performance of the fund, year to date, the fund is up 21.36%. On a one-year basis, the fund is up over 52%. On a three-year basis, on average, investors earn 11.96%. On a five-year basis, investors earned 12.27%. And since inception, in March of 2012, the fund has earned 12.72%. Now, it's important to look at the percentages and the rates of growth, but we always like to communicate what this means in dollars. So, if you've invested $10,000 when the fund was public in 2012 in March, it has now grown over 3 times to $31,510. And we think it's most important to follow these results, but also for you all to understand how we achieve those results. And we achieve those results through the types of businesses that we invest in that we believe to be the highest quality opportunities. An example of one of those businesses that we own today is a software company. And the company itself has the type of financial profile that we deem as high quality, meaning the business has very predictable revenue over time because the users of the product subscribe to the product, so we see a very predictable revenue stream over time. The business does not require any debt to manage itself, and it generates a lot of cash which can be deployed either through the business in a way to invest into the product or through acquisitions to grow more capabilities of the product. The business itself connects suppliers and retailers in an automated way and is replacing manual methods such as faxes and phone calls and emails for purchase orders that often create problems and inefficiency. We see a long-term runway for the business, and we see them doing so in a way that, again, will be highly profitable and require no debt. So we appreciate the opportunity to provide an update on the fund today, as well as what we see in the future. And as always, we look forward to questions later in the program.